I figure the market's going to be making new highs by the end of the year, and I'm really hoping that we see it within the next 3 to 6 months. I bought again this week. I bought last week. Obviously, the down moves make me a little bit nervous, but I'm going to get into why I think we're going to make new highs by the end of the year. So stick around. It should be a really good video.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Friday. I hope you're all doing well. I hope you didn't have another terrible week. I hope that things didn't get crushed. Before we get into the video, I just want to get a few things out of the way. If you haven't hit that subscribe button already, do me a favor and hit that subscribe button. And if you could, smash that like button as well. You have no idea how much that helps YouTube's algorithm, and it really helps the channel. I really appreciate seeing the guys who consistently come in and make comments and get involved in the video chats. I really like doing this stuff, so I appreciate that and thank you. I know I haven't posted quite as often, but we were out of town in Mexico City. I'll talk about the trip a little bit as well. And as always, none of the information I share in the video is investment advice. Please reach out to your financial advisor for the financial decisions you make in your life. You need to do your own research and not listen to me. And as I say all the time, you shouldn't really listen to anybody on YouTube because you have to make your own decisions basically because everybody's situation is different and it has to be made for you. Now, if you want me to look at your portfolio and even have a discussion about your financial goals, I'm happy to help anybody any way that I can. But again, know that I am not a financial advisor and I'm just a guy sharing my opinion, and don't take it as like fact. I even talked a little bit in the video I did a few days ago about I don't mind when I put a trade on and I lose money. I'm comfortable with that. I know the risk I take on and it's okay, but I feel really guilty when other people follow the advice and it's on something that may not have had good performance like they were hoping or potentially did pretty poorly just because I don't want to lose for anybody else. Whereas if I lose for me, I'm okay with that. Now, I still see some bargains out there, honestly, and I really like certain companies right now. On top of that, I think if your goal is long term, that everything works out just fine if you give it time. I think the sell off right now creates a great opportunity. People are nervous about a recession. There's all sorts of fear out there. They're talking about the tariffs. They're talking about Trump making things all crazy. But he's only been in office like a month and a half. Nothing's really gone on in most people's lives. And when I see the comments and I watch certain things, it's almost comical how people blame egg prices on Biden if they don't like Biden, and they'll blame egg prices on Trump if they don't like Trump. A lot of this stuff has nothing to do with anybody in office. That was the bird flu. That wasn't the president, and they aren't able to control prices like that. Now, the Department of Justice is even looking into the egg companies gouging people when that's probably not what went on. On top of that, even if they're found guilty, it's not like that means the egg prices are necessarily going to come back down. That just means they'll fine the companies. The government will collect that fine to support the for ongoing investigations about others, and nothing goes back to the people. Now, for some reason, it seems to make people happy when these companies get investigated, but in my mind, it's kind of a battle of futility and almost a waste of time. So today was a super interesting day for me personally because I was flying back home, so I caught the open. I saw that the market was getting beat up pretty good. And then it looked like it was starting to recover, and as my flight was taking off, it looked like it was going back down. By the time I landed, the market had closed and it looked like it had recovered, and actually, it looked like it closed up on the day, which is a great way to end the week and to end on a Friday. And when I'm looking for bottoms, those are the type of things that I look for. Again, not a guarantee because plenty of times I'm wrong, but I think this shakeout has looked really scary. The market keeps pushing down, but not breaking new lows. The stocks that I keep an eye on, like Amazon or Google, keep on pushing against the bottom of their range, but not being able to push lower. So my hope is next week to consider continue to be nervous, but start drifting higher finally. Of course, I always hope for that. But the reason I think we're going to close up for the year is I don't think anything's really that bad. I've said it in other videos that I try to make my guesses based on the earnings that are coming in currently, and I don't even listen to the forecast too intently. I really want to see what I think is going to happen as the earnings come out, because it's even the CEOs have a tough time determining where they think the market's going to go. They can see the current month and they can make an estimate for the next month or two. But anything outside of that is very hard for anybody to be able to predict. On top of that, they've now quelled, I'm not even sure the word I'm looking for, but they've basically eased our fears so much and prepared everybody for a slowdown that may or may not come and probably isn't going to be as bad as they've prepped us for. When I go out, people are still out and about. It seems like restaurants are busy. It seems like stores are busy. It seems like people are still buying stuff and complaining about how expensive it is. You add to that the news and the tariffs, and what I think is that gives opportunity for companies to continue to raise prices. And they probably have more ability than people think. We're all going to complain. We're all going to say how much it sucks. But if you haven't lost your job and you still have income coming in, I'm guessing you're still going to continue to do the things that you generally do and then just complain that it's super expensive. With the tariffs in the news, there's an understanding of why companies are raising their prices because of how big these tariffs are. At the same time, they really haven't gone through and they keep getting postponed. So it's rather interesting. You add to that the companies already bought ahead of the tariffs a lot of the products and have filled up their warehouses to get ahead of those new charges that they're going to pass through to customers anyway. So if you're a company like Target, where the stock has gotten beaten up really badly, or Whirlpool, because the tariffs are going to impact these companies dramatically. And in the meantime, they're getting ahead of the curve by raising their prices. So if the tariffs don't come, or if they're slower than what people think, and the new higher prices are able to hold, which they might not, but if they are, that means better margins, higher profits, better sales, and continued growth. And if the new prices don't quite hold, but the tariffs didn't go through, it gives those companies opportunity to do sales or start discounting those prices back down to where they already are. So it's not like they're really going to have worse earnings. They may just end up stagnating a bit or being the same. But I think option one is going to be what happens. I think it allows the companies to continue to raise prices, drive higher earnings, and do better over the long run. So I really see a company like Target or Whirlpool, which I've mentioned a bunch of times, as super bargains right now. They're not the ones that I'm plowing into in my trading account, but I have both of those in my set it and forget it accounts, and I've even added on to both of them. Now, what I've talked about in the trading account is I've narrowed it down to only 5 stocks: Amazon, Google, Netflix, which I recently added on and put as a new position, nvda, which is sort of similar because I don't have it in my set it and forget it account, and Meta, which I have. And it's the hardest one for me to hold as a trade because it's the one I have the largest position in. So when it starts to correct or pull back, I start to overthink it because I have it in the other account and I know how much I have. So I feel silly that I have it on as a trade as well. But part of why it's my biggest position is I really love the company. Now, those 5 are the 5 that I'm focusing on in my trading account. So sometimes I lighten up the positions and I get into them longer, but it's also because I like those companies a lot. And I feel like if I'm right about my prediction on the market, the companies that were the strongest prior to the pullback, well, the ones that will be the ones that are going to be strongest going into the upward move again. And even though we should see a broadening out, the bigger, better, stronger companies should be the ones that continue to outperform. I also happened to catch the last few minutes of my friend Ryan Williams live that he did tonight. And people were talking about Nike, of course, because they had earnings come out and the stock corrected even further. So there was discussion about Nike. Even a company like Nike, I see as a good investment. Now, it's not a position I have on, so please don't hear it the wrong way, because the reason I see it as a good investment is a name brand company like Nike. If you're going to own them for 5 or potentially 10 years, I think things work out just fine. Now, how it'll do over the next 6 months or a year, I have no idea. But usually, the biggest and the best companies, whether it's a company like McDonald's or something like Starbucks, they always have competition. And I would put Nike in that same category. So when I hear comments or see the comments in the chat about how Nike's done because whether it's on cloud or Adidas or Puma or whoever that somebody else likes, like these are just other people in the space that are competition against them. But Nike really is the biggest one out there and the baddest, and they'll find a way to work through it. I don't know how long the rough period will last because it could be a while. But again, if you're waiting 10 years, I think you would do just fine with a company like Nike, and this is the least expensive it's been in terms of price to earnings in a long time. So it may correct further, it may take time, but it's still a great brand name that I wouldn't stress about if it's something you have and it's something that you plan to just leave in an account for an extended period of time. If you're trading, I don't know that it's a company I'd want to be taking a shot at to pick a bottom, similar to how I feel about Whirlpool or Target, like I discussed. But what's going to change in Nike's path to really destroy their brand and cause it to not do well over the next 5 or 10 years? So that's why you have to decide what fits you and what your time horizon is and what your goal is with the investments you're making. We all want to see things go straight up right away. That's a nice feeling. But you have to really do your due diligence of what your goal is with the different type of picks you make. And I know I haven't talked about Boeing in a while, but I don't know if any of you saw. They got a nice big order, which shot the stock up a good amount. And you see it finally to leaping ahead again, too. Not in the news a whole lot. Nobody's talking about all the negative stuff anymore. Again, bad news on good companies. When I first started talking about Boeing, the comments I got in the comments section of they're going out of business and they're terrible and what an awful investment almost makes me like the company more. And if you stick with it a long term, I really don't see Boeing going out of business because our government is going to figure a way to support them. They're not going to want our planes for Air Force One and our commercial jets being built by non American companies. And there's really only two in the space, and Boeing is really the dominant company. So, despite the plane crashes that they had, despite the CEO that no longer is the CEO using some of the planes for personal use, despite the untimely deaths of some of the whistleblowers, despite all of the stuff that was going on to push that stock lower, in my mind, bad news on good companies creates good opportunity. And if you're going to stick with it and you're going to hold out, you're going to end up outperforming the market and doing well. But you really have to have a long term horizon and be able to take the pain while you wait for things to finally fade, not be in the news anymore, and be able to reverse. Quite honestly, there's been such negative news on Tesla recently, it makes me think that it's a good opportunity to pick up Tesla. My only trouble with Tesla is I feel like it's still overvalued, but that's just my opinion. If it's a company you've been looking at, the bad news is out there and they've been pushing the stock lower. And whenever the sentiment is negative, to me, that's sellers. And I want to be buying from sellers. My difficulty with Tesla is the valuation is built on things that aren't profitable at this point, and that's always a struggle for me. I don't know how big robo taxis are going to be, and then you add into it that they've already got Zoox and Waymo in the space. And even though they're both really small and don't get talked about a whole lot, they're actually out there in the marketplace. And I've talked about it in other videos. It's one of the things that I really like about Google is that to me, Waymo is what I would call like a free call. Now, I don't know how many of you are comfortable or know what I mean by a free call, but like a call option where you're buying calls, and let's just say the way I look at it is you're paying zero for the Waymo call on Google that really could explode and become something rather large. It may not, but I don't think you're paying anything for Waymo when you're buying Google. I think you're paying for the search and YouTube primarily. And there's a whole bunch of other companies that are getting thrown in there that you're not really even paying any extra money for. It's why I don't worry so much about the negative news from the Department of Justice on them, because my thought is even if they split them up, other than I do think it hurts them to get rid of Gemini and make that a separate company, the stuff that I've read on that just sounds like it just hurts the company and really doesn't help value something else because it integrates and works in their I don't want to just say system, but in their microcosm, their whole world, and it kind of works together. So to separate it is almost kind of silly. But you get all those other companies where the value is really just coming from the search and YouTube or primarily, and all that other stuff is almost free. So that if something like Waymo really hits it big, you really could see a good increase in the stock valuation from something that you're originally not paying a ton for. At least that's how my brain works on it. Whereas with Tesla, you're paying a whole bunch for robotaxi and robots that don't exist yet. It's almost like the opposite, where I like to be invested in a company like Google. Now, that being said, kind of what I was getting at, the negative sentiment on Tesla right now, because the stock's fallen in half, has been pretty strong. So if somebody were looking to get into Tesla, I guess I'd want to look for when the negative sentiment is around, which seems like now. So maybe it's a decent time. Yeah, not really an endorsement because I don't really love Tesla. I mean, I love the car. We have two of them. I have one and my wife has one, and I don't think I'd ever go back to a ICE vehicle with a combustion engine because it's so much easier. Like, don't get me wrong, some of the other cars seem to be put together better in some respects. And like, I really like a Mercedes. They're just nice and solid and whatever else, and they drive really well. But my God, the Teslas are just so easy. There's no maintenance. It's like a joke, plug and play, but no oil changes, no timing belts, no nothing really. It's not about the gas and the other stuff, it's just how easy it is to use. We bought the car that my wife drives back in like November or December of 2014. So it's been over 10 years at this point, and we've spent less than $500 on all repairs, excluding like tires and windshield wipers. Outside of that, we've had two things they've need to fix, and the most expensive one was like $180, which is pretty amazing for a car that's 10 years old. And I see some people talk about Teslas, and then in the comment section, people start bashing on them how stupid they are and they're terrible and also and I find it kind of silly and just feel like if you drove one you might be rather surprised because there are certain things to the car that it's way easier to drive. The pickup's incredible, and it's not my push to tell people to go get a Tesla, but it's weird how once you change to it, I don't really envision myself ever going back to a gas drinking car. Even sitting and getting the oil change just seems like a waste of time to me at this point. And then I don't know how many of you watch the housing market, but what I've seen going on here in Las Vegas has been super interesting lately. Now, just for full disclosure, I do mortgages, so I have a bit of an insight as to what's going on. I'm at a very small company, but at the company I work at, I'm director of loan production, which means I essentially help out all the loan officers. So I have a good gauge as to when they're busy and when they're slow. And it seems like most of them are having clients where they'll do an approval, meaning somebody comes in who says they want to buy a home. And a lot of people are getting cold feet because they think the prices are too high and they see a big correction coming. Now, I've seen that happen for the past year or so. And what's interesting as to what's going on, they'll put in offers that, just my opinion, seem to be a little too low. The sellers won't sell to them. Eventually, the seller gets taken by somebody else and the house sells. and the clients end up not buying. When that tends to happen, the prices then start drifting higher, and the buyers get frustrated and walk away and never end up buying a home. I find that type of market can go on for years, and I'm watching the prices continue to drift higher and higher and higher, and people just say that it's too expensive and rates are too high and everything else. Meanwhile, February home sales were surprisingly high. So the buyers are missing the market, scaring themselves out of the market, thinking that there's just some big collapse coming. That's similar to what I'm saying about the economy. I don't see some big collapse coming. You'd need some sort of black swan event to create an influx of a lot of sellers, not a normal amount of ebb and flow of foreclosures. And the longer that we stay where we are, the more normal the market will get. But you would still need something that would actually produce a lot of sellers. So let's go back to 2007 and 2008 and talk about what I saw as to why I think the economy really collapsed back then. You add to the housing market the option arm, and people not understanding the product had four different payment options where you could pay like a 30-year traditional mortgage. You could also pay a 15-year mortgage payment. You could pay interest only, and you could pay what was called negative amortized. So you'd get your statement in the mail. It would give you these four different options. Maybe you could pay $800 this month. You could pay $1,200 this month. You could pay $2,500 this month. Or you could even pay $3,500 this month. Most people didn't really understand what those were. And keep in mind, I just kind of made up the numbers, but I have a rough idea of what it probably looked like. They didn't understand that after 5 years on average, these would then normalize and become a loan that you have to make your amortized payment, meaning you had to make your normal loan payment. If you got that option every time you got it in the mail, most people would pay the minimum payment, which was a negatively amortized loan. What that means is they were actually adding on to their loan balance. So if you bought a $500,000 loan, and the amazing thing is sometimes you could borrow for the down payment. So you take out like a 90% loan on the first loan, and then the other 10% was another type of loan that you were borrowing as well. So you've kind of put no money out of pocket. You're then making this 0% payment that's adding on to your loan balance. So if you bought that $500,000 home and you had a second mortgage for $50,000 for the down payment and you owed $450,000 and you were making that minimum payment, you would actually owe more money on the house each month, right? Is everybody with me? Please, in the comments, ask questions if you don't understand this, because this is very important as to why I think the housing market collapsed. We had a lot of those loans out there, and we had a lot of people making the minimum loans, meaning they were adding on to their loan balance. When the housing market started to correct in price, your $500,000 home starts to drop to $450,000. It's been nothing terrible quite yet. You're still able to make those minimum payments so you don't even feel it. But as time goes on and the housing market corrects a little bit more, and the next thing you know, you're upside down and you owe more on the house than it's worth because the price is corrected, you now owe, say, $475,000, and maybe the house is only worth $425,000, and now your mortgage corrects and you get the new statement in the mail and you have to make that $2,500 a month payment, or now it's $2,700 because you've added on to the principal balance, or whatever the new payment is, and you can no longer make that $800 payment and you don't even understand why or what happened. So you pick up the phone, you call the guy who sold you the loan, and he starts to explain it, and you're like, you never told me that. In the meantime, you owe more money on the home. Why would you keep making that payment as the house price continues to drop? Your payment's gone up, you can't really afford the higher payment, and this started happening with loan after loan after loan, bringing a lot of sellers to the market. This wasn't like a normal ebb and flow of a traditional mortgage or a traditional economy where some people were foreclosed and some people weren't making their payments. It was an influx of a large amount of people who didn't want the homes. They then started giving the keys to the bank, and it just piled on itself. You come and you fast forward to today, where the people who got stuck in the homes have a low interest rate that's a fixed rate, typically for 30 years, where they're pinned into these mortgage under 4% interest rates. As house prices have gone up, taxes have gone up, and it would cost more now to buy a home than it did back then. Even if prices started to correct, their payment would still be lower. So there isn't going to be this huge influx of a zillion homes coming to the market because the prices are correcting and people can't afford it. It's almost the opposite where they're stuck in their homes. And I don't see a lot of homes coming to the market, which is why we're seeing the continued prices drift higher. That's my thought on the housing market. I also think if you want to own your home to live in, it shouldn't be an investment the way people look at it. If you want to buy an investment property, then absolutely do all the analytics to do the math of what makes sense. But if you want to buy a home to live in, I think you do that because you love the area, you don't plan to move, you like the house, you want to paint the walls purple and not have to ask a landlord, and you have a pride of ownership and want to upgrade things and you want to do stuff and you want to have it as yours. So you see if you can afford it and you get into it because you can afford to live in the house. You don't think it's just going to go up in value and I'm going to get rich on it, because the reality is if you live in it you're not going to get rich on it because it's your house and you live in it. It's not money that you have to spend, it's a place you have to live. And if you have kids and you like the school district or friends who live there, it's where you build your roots. We are our home that we live in because it's where we want to be. We like our neighborhood, we have friends in the area, and it's that type of stuff. It's not because we hope that it's going to go up in value and make us rich. If it does, great. But the reality is, I think it's just going to be handed down because we plan to stay here. And we don't look at it that way. Uh, Just my friendly advice. Anyway, rambled enough. I hope everybody's well. Have a great weekend. I'm going to try to take a little time and put this together and see if I can get posted today. Again, before I forget, before I go, hit that like button, hit the subscribe button, make some comments. Let me know how your week was. Did you guys buy into the markets? Are you a long term investor? Are you looking to trade? Do you do a balance of both? Like, what's going on in your world? And say hello. Have a great weekend, and I'll talk to you guys soon.